Florence, 1397. A man with no noble blood, no inherited title, and no mercy walks into a city drowning in debt and decides not to rescue it. He decides to own it. Giovanni de' Medici didn't build the greatest banking empire in Western history by playing fair. He built it by understanding one truth that your financial advisor will never tell you. Wealth is never created. It is transferred from those who don't understand power to those who do. That transfer is happening right now, in your economy, in your bank account, and the blueprint being used against you is over 600 years old. It is 1402, and a Florentine wool merchant is sitting across from a Medici agent, signing a loan agreement he does not fully understand. He thinks he is solving a problem. He is actually entering a cage, and the door closes so quietly he will not hear it for years. History books never tell you this part. The Medici were not simply bankers. They were architects of obligation. Giovanni de' Medici understood something that no ledger could contain. That money borrowed under pressure does not create a transaction. It creates a relationship, and in that relationship, only one party ever held the power. The mechanics were surgical. The Medici structured loans with flexible repayment windows, cultivated personal relationships with borrowers before the ink dried, and extended credit precisely when men were most desperate and least rational. This is the moment everything changed, not when Florence grew wealthy, but when the Medici realized that a man in debt is not a customer. He is an asset, and here is where history stops being history. This pattern keeps repeating and most people never notice it. Modern credit systems, revolving debt products, minimum payment structures, they are not innovations. They are refinements. The same move is being made right now, at scale, with algorithms replacing the Medici agent sitting across the table. The names changed. The chain did not. The Machiavellian lesson history proved is this: whoever controls the terms of your debt controls the trajectory of your life. Not dramatically, not violently, quietly, contractual. The merchant in Florence died still believing he had made a free choice in 1402. They have been using this playbook for centuries, and what the next point reveals is how the Medici made certain that even kings could not escape the same trap. It is 1413, and the Pope needs money. Not prayers, not faith, money. And there's only one family in Florence that the Vatican trusts enough to hold it. What happened next was not an accident. It was the most calculated rebranding in financial history. Giovanni de' Medici did not want to look powerful. That was the entire strategy. While rival banking families built monuments to their own ambition, Giovanni positioned the Medici as humble servants of the church, loyal partners of the merchant class, quiet administrators of other people's wealth. History books never tell you this part, that the most dominant financial empire of the Renaissance was architecturally designed to be invisible. The mechanics were precise. By managing papal finances across Europe, the Medici gained access to sovereign intelligence, pre-crisis currency movements, and political leverage that no military could have purchased. Every time a cardinal traveled, every time a crusade was financed, every time a king needed church approval, the Medici were the silent room where those conversations were funded. They did not sit at the table. They built the table and rented every chair. This pattern keeps repeating, and most people never notice it. Today, the most powerful financial institutions do not announce their dominance. They sponsor foundations. They fund universities. They appear at climate summits. The same move is being made right now. Influence dressed as philanthropy, control presented as partnership. They have been using this playbook for centuries. The Machiavellian lesson history proved is this: the empire that does not look like an empire is the one that survives. Visible power invites resistance. Invisible power invites trust. Florence never feared the Medici. That was precisely why it could never escape them. And what the next point reveals is how they use that trust to make sure even their rivals finance their own defeat. It is 1345, and the two most powerful banking dynasties in Europe are dying in the same week. The Bardi and Peruzzi families, firms so vast they were called the pillars of Florentine finance, are collapsing because one man on a throne in England has decided he will not repay his debts. King Edward III defaults, and overnight, the financial architecture of an entire continent begins to crack. History books never tell you this part. The Bardi and Peruzzi did not fail because they were reckless. They failed because they were loyal to a single relationship, a single geography, a single point of catastrophic exposure. They had concentrated so much capital into English royal debt that when the crown defaulted, there was no cushion, no counterposition, no escape. What happened next was not an accident. It was the inevitable conclusion of a strategy that had confused proximity to power with protection from it. Giovanni de' Medici watched this collapse and drew a different map entirely. He structured the Medici Bank not as a single institution, but as a network of semi-autonomous branches: Florence, Venice, Rome, Geneva, Bruges, London, each operating independently, each hedged against the failure of the others. He moved into wool trading, silk manufacturing, and church finance simultaneously. This is the moment everything changed, not the collapse itself, but the lesson one man extracted from it while everyone else was mourning. This pattern keeps repeating, and most people never notice it. Concentration feels like conviction. It feels like confidence, but it is exposure wearing the costume of strategy. The same move is being made right now every time someone ties their entire financial life to one income stream, one asset class, one employer. They have been using this playbook for centuries. The dynasties that survived always held multiple fires. The Machiavellian lesson history proved is this: diversification is not caution. It is the architecture of survival. The Bardi had more. The Medici lasted longer. And what the next point reveals is how the Medici made sure that surviving longer also meant knowing more, and how information itself became their most ruthless financial weapon. It is 1464, and a merchant in Bruges is making a trade decision based on information that is already 3 days old. He does not know this. He believes he is acting on current intelligence. He is actually walking into a position the Medici have already priced, already anticipated, and already prepared to profit from. By the time he realizes what happened, the transaction is complete and the advantage is gone. History books never tell you this part. The Medici courier network, the Staffetta, was not a postal service. It was a financial weapon. Riders moved between Florence, Rome, Venice, Lyon, and Bruges on rotating schedules designed to compress the time between an event occurring and the Medici knowing about it. A pope falling ill, a harvest failing in Burgundy, a military campaign reversing course in the north. Information that would take competitors a week to receive arrived in the Medici counting house in days. And in medieval finance, days were dynasties. The calculation behind this was ruthless in its simplicity. Markets do not move on events. They move on the perception of events. And whoever controls the sequence of perception controls the price. This is the moment everything changed, when the Medici stopped thinking about money as the asset and started treating information as the true reserve currency of power. This pattern keeps repeating, and most people never notice it. Today, the Staffetta runs on fiber optic cables. High-frequency trading firms pay millions to co-locate their servers nanometers closer to exchange processors. Financial institutions harvest satellite imagery of retail parking lots to predict earnings before announcements. They have been using this playbook for centuries. The technology accelerated, the strategy never changed. The same move is being made right now, and the gap between those who know first and those who react late is where all the wealth silently transfers. The Machiavellian lesson history proved is this. In every financial era, the decisive advantage was never capital. It was timing, and timing is just information with urgency attached. What happened next was not an accident. The Medici didn't just use information to trade. They used it to make certain that when rivals finally moved, they were moving into traps that had already been set. The Medici did not build their empire with gold. They built it with architecture. Invisible architecture that shaped how money moved, how power breathed, and how entire generations of rivals walked confidently into their own financial destruction. Debt engineered dependency. Legitimacy manufactured consent. Diversification buried every dynasty that mistook concentration for strength. And information ensured that by the time the world saw the board, the Medici had already won 3 moves ahead. This was never about banking. It was about control, quiet, structural, generational control. And the blueprint has never been retired. It has only been updated. History is not warning you. It is describing your present. If you have watched this far, you already think differently than most people in your financial life. Subscribe now, because what this channel reveals next will make certain that the blueprint being used against you becomes the one you use instead.